Holy moly, donut shops, master traders, fellow sheeps. Did you guys see what happened yesterday? It was so incredible. These last couple of weeks have been just simply incredible. If you guys recall in previous video, Uncle said do not call a top unless we get that false breakout setup. Do not call a top unless we break down a structure, and we got that breakdown. We got that false breakout setup. And then we were watching the 50 daily moving average. We talked about how if bears want more downside, they need to break it down. We got the breakdown. That was on February 24th. We started the week off bearish. And the last couple of trading days, you guys can see how the market has been, wow, it's just been treating that 50 daily moving average as a strong sell zone, with each test leading to a very beautiful drop to the downside. And yesterday, well, you guys see the size of that candle. Just beautiful move to the downside. Shout out to the bears. I hope you guys are extra happy. And bulls, you guys might not be happy right now, but you guys know the market has its time where it goes down and the market has its time to go up. We're going to talk about how to trade it bullishly. We're going to talk about how we're going to trade this bearishly. You guys know how we do in the Sheep's Den on Uncle Charles' YouTube channel. The question now is, like, are we going to fill this gap in? We're like so close to filling this gap right here, guys. That gap is from January 14th. And the open of that candle is around 584.36. So I need to see SPY get to the pre-gap area. I need to see SPY get below 584. I do have a fib level around 583.3. So breaking down those levels, in my opinion, would definitely fill that gap in. And if it breaks below it, more downside would definitely be possible. Okay, now, wow, what a beautiful trade. How did you guys trade this? Did you guys trade this okay? Let's do a little quick recap. Okay, now we go to Uncle Charles' Discord. I wrote for the group yesterday. 596.5 and 595 are first support levels. If they fail, bearish with 593.5, 592, and 590-ish in play. Okay, and I wrote here, we're going to be bullish if 598 and 600 recaptures. Bulls have a shot at a bigger bounce with 602 and 604 or higher in play. I needed to see 598 and 600 clear to be bullish, get above that 50 daily moving average. And to favor more downside, I needed to see 596.5 and 595 fail. You guys know Uncle Charles uses the 15-minute chart, and you guys can see on the 15-minute chart at the yesterday at the 9:30 candle, we broke down 596.5. The candle after that, the 9:45 candle, we broke down 595, and we smashed those lower targets, 592, going as low as 590.5 is before we started getting that midday chop. You guys noted the morning been starting off strong, either to the downside or to the upside, and then we get that midday chop followed by that afternoon continuation. That's pretty much what happened yesterday. The midday chop got a false breakdown. We recaptured 593.5, and it gave us some nice level-to-level move. Okay, it gave us some nice level-to-level move. So if you trade level-to-level style, even when it's chopping, there's a way that you can still be profitable. But after recapturing 593.5, we got a back test of 596.5. That was the first level Uncle was watching on the day on whether to be bullish or bearish. Breaking that level down told me to be bearish. So when we got that little beautiful bounce and we back tested that level and had that strong rejection, that was definitely a sign to continue to be bearish. We were below the 50 daily moving average, which is sign number one to be bearish. And sign number two is intraday. We see that the support level turned into a sell level, pushing price lower, breaking down support, eventually just giving us this beautiful move all the way go down to 584-ish, guys. It was amazing. So close to filling the gap. Now the question now is, what is the next plan of action? Okay, so we got to look at the context of the daily chart, because that's, like, you know, most important one to me, like as far as trading goes. Now we have to look at what was the last level that SPY broke down? What was the last key level that SPY broke down? And in this case, on the context of Uncle Charters' chart, 588.2, I'll round it to 588.3, is the last critical key level that we lost. The reason is that is a fib level. 588.23, like I said, I'm going to round it to 588.3, okay? So for me, that is today's equilibrium level. Below it, I'm going to remain bearish. Above it, Uncle is going to I may favor some type of relief bounce. I'm not going to fully turn bullish, but I'll favor a bounce level to level style. Okay? So what does this mean? This means I have no urge, no intentions of longing unless we can get a false breakdown setup. The same way I say don't call a top unless we get a false breakout. Well, I'm saying it for the bull case. Don't call a bottom unless we get a false breakdown. So for me, Uncle Charters needs to see 587 clear, 588.3 clear, 590 clear to put those higher targets in play. 592, 594, and 596 plus. Okay, 596 plus. As long as below 588.3, Uncle Charters will remain bearish. Bearish follow through though would be to break down some more support levels. The next support level I have is 585, 583.3, 582. Breaking down those levels will definitely fill in the gap. We'd also have a minor gap. Well, I mean, is that really a gap? I mean, it filled in a way with the wick. You guys see that one from January 13th to the January 14th? Got this little space right here. It's not a close with the body. It's with the wick. See, a lot of traders, we have disagreements about what's considered filled. Some of you guys might also disagree with me, but the way I considered a gap filled is if we closed below or above the pre-gap level. To me, this is a gap still. Some of you guys might say, no, that gap is filled. But to me, that's still a gap. It's cool, okay? We can agree to disagree. But in my opinion, there's a gap around 584-ish. And there's a gap around 581.3-ish. So breaking down those levels, right? 585, 583.3, 582, 580 would fill in those gaps. All right, you guys understand today's plan. Below 588.3, remain bearish. Above 588.3, we could possibly get a relief bounce. All right, let's move on to triple Q, also with the beautiful drop to the downside. I'm telling you that triple Q has long left the 50 daily moving average. Since breaking down the 50 daily moving average earlier this week, it has not looked back, and that 200 daily moving average it's very close. Can the bears get there? We got to worry about this buy zone that we have here. This buy zone back from January 13th. Yeah, it's around 499.7, guys. If the bears want more downside, they need to break down that low. Avoid a double bottom. Break down 499.7. 498 or lower would be in play. The next fib level below that would be at 490. And I'm definitely watching that 200 daily moving average. Right around 491.5-ish, 492 area. It'd only be possible to get there if we break down support levels, 499.7, 498 or lower, okay? If we are to get a bounce, if they want to try to go for the double bottom as usual, resistant levels must clear. 501, 503, 505 must clear to put 507 in the fib level at 508.5 in play. And above that, I have 511, 512.5, 514 in the fib level at 515.5 above. All right, so below 499.7, 498, more downside is possible. Trust no bounce unless 501, 503, and 505 can clear. Tesla, like I said, guys, this ticker symbol is still looking bearish, but don't trade it based on your feelings on Elon Musk. Okay, we're not short in this ticker symbol because we don't like Elon. We short in this ticker symbol because the price action said we are bearish, and right now we are still bearish. You still have this big old gap all the way down in the 250s, and a lot more gaps all the way down in the 216s. Can we get there. That's a long ways away, but this stock is pretty volatile, so we shall see. As far as support levels go, holy moly, donut shop. I have one at 279, 277, 275, 273, 271.3, and 270. All right. You want to look guys, if we break down more support levels, don't argue with the price action. Just go with it, level to level style. Leave your runner with a trailing stop loss. That's all Uncle could say. Because this is crazy. This stock be defying gravity, but sometimes, well, you guys see what happened. It can crash as well. Amazing. But yeah, we break down those support levels, then more downside incoming. If we are to get a bounce, 281. I have a fib level at 282.86. I'll round it to 283. I like my round numbers. So 281 and 283 must clear, guys, to put those upside targets in play. 288, 290, 292 would definitely be targets of Uncle Charters. This ticker symbol is overall bearish still right now. So I need to see behavior change. We need false breakdowns of multiple levels for me to start favoring some bigger bounces. Otherwise, we lose those support levels, 279 and 277, then more downside. We go. NVDA, incredible sell-off yesterday. Can the bears give us more downside? We shall see. Overall, though, below 120 and 122 highest as a fib level, Uncle Charters is bear biased on NVDA. Next support is at 118.5. That's the gap fill. Can they fill the gap? 118.5. 117. And they must break down to put 115.5, 114, 112 in the fib level at 110 in play. If we break down those support levels, then more downside incoming. All right. If we are to get a bounce, 120 and 122 must recapture to put 125, 128, 129.5, and 131 plus back in play. IWM definitely looking bearish. We talked about that 215 level. We broke it down. And that was a beautiful play, guys, if you guys caught it. The next fib level Uncle has is at 211.8. If 211.8 fails, 210, 208 or lower incoming. Get yourself another $2, maybe $6 move. But it needs to start with the breakdown of 211.8. If we are to get a bounce, two levels must recapture minimum. And that is the 213 and the 215 level. Minimum. It needs to recapture more levels than that to be bullish. But at the minimum, 213 and 215 must recapture to put 217 and 219 plus back in play. Apple with the beautiful pullback came right back to this 237.2-ish resistant level that we had. This level has been like a magnet for months. Months, I tell you. And here we are treating it like support. And if it fails to hold, 237.2 fails, we are heading down low with 236, 234, 230, 228.4 would all be targets for Uncle Charters. If 237.2 holds as support, trust it only if it's strong enough to clear resistant levels. Give us that false breakdown setup. 240, 241.5, and 243 must recapture, get back above those levels, and then maybe Uncle will favor some type of bottom is in. Whoo, look at Amazon. It's so amazing. That drop is so amazing. What was the last key level that we lost? It's 210, guys. 210. 1.236 fib level. 210. That's the equilibrium level. We broke that level down. If there is to be more downside, the price must stay below 210 on any bounce. Next support's at 208 and the fib level at 206. Those levels fail. 204.5, 203, and 200 all incoming. Don't argue with the price action. And if we do get some type of relief bounce, 210 was the level we broke down yesterday. So to even make a false breakdown setup possible, that level must recapture. It must clear to put 211.5, 213 fib level in play, 215 and 216.2 above. Our favor of bottom is if it's only in if we can get above 216.2, 218, and 220. Otherwise, below 210, Uncle is bearish. Microsoft also looking bearish. Holy moly. The next fib level support I have is at 392. If it fails, 380, 387.5 and 386 all in play. All right. Now the last critical fib level that we lost was all the way up at 396.3. I'll round it to 396.5. So from here, Uncle has resistant levels at 393.5, 395, 396.5. Those levels must clear to try to get us some type of relief bounce. To put 400 and 402 back in play. Above 402, I'd favor a bigger bounce. Meta just looking nasty. Nasty if you're trading this bull biasly, that is. For everyone else, that's, hope you guys having a good time. But I tell you, based on where it's at right now, the next support level I have is at 660.7 and also 659. Those levels fail, more downside is definitely possible. Possibly all the way down to 652 to 650 range. As usual, we don't want to call a bottom. Let's wait to, let's play it safe and wait for a false breakdown setup. Okay? I have resistance at 662, 666, 667.6. Those levels need to clear to try to trigger like a false breakdown setup to put 670, 675 or higher back in play. DXY, finally it's bouncing. It's going. It looked like it's going opposite of the SPY again. So that's good, because it was like had a divergence with SPY for a little bit here, but looked like it's correcting itself a bit, going for the bounce. It recently cleared this 107, 106.9 and 107.1 level fib levels. If it can stay above 107.5 and 108 and 109.1 would all be in play, would stay in play. I would not favor DXY dropping back to the downside unless it drops back below 106.9. That would put 106.2 or lower in play. Coin, guys, beautiful trade setup with Coin. We was watching at 214 level. We was watching other levels as well, but at 214 level was the fib level, the key level. And it broke down, gave us a nice, beautiful drop to the downside. Now, it looked like we're gapping down even lower. As of right now, I do have support at 200 and 197.6. If 200 fails, 197.6 would be in play first. And below that, we can possibly go for the gap. I have a gap right here from way back in November. To fill that gap, this candle closed at 193.96. So as usual, for me to fill it, for me to consider a gap filled, it needs to get to the pre-gap area. So getting below 193.96 would, I consider it a gap fill. All right, but to get there, like I said, 200 197.6 must fail, and then we can get there. All right, below 197.6, that gap fill would definitely be my target. All right, what did I say it was? It was around 193.96. Gotta break that down, and then I would put 190, 188, and 186 all in play below as well. Trust no bounce unless we can clear some lost levels. All right, so as of right now, I have 202, 204, and then a fib level at 205.85 as resistant levels. If we can clear those levels, 207, 208.5, 210, and all the way up to 214 would be back in play. Coins are very volatile stock, so if you don't have much experience, be careful. If you do want to challenge yourself or you're a more experienced trader, this is definitely a good ticker symbol to trade. Doge, yeah, still looking bearish. I mentioned to everybody, we don't want a long unless we can get back above 23 cents. If we lose that 19 cents, more downside income, and it looks like that's what's happening. This is such a bummer. I don't really short, Doge. When I trade this, I usually just long bias, I guess. I don't know. It's just simpler for me because shorting is just complicating. You have to short, then you got to cover and blah, 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 blah. I don't even really want to own this. I just want to trade it, But as far as going long, yeah, as of right here, I mean, I need to see it back above 20 cents. And to make it more comfortable for me, I need to see it back still above 23 cents. So as of right now, I wouldn't look to long. And trading-wise, we're not talking investing. Trading-wise, I would not look to trade or go long unless we can get back above 20 and 23 cents. If you do long above 20 cents, target 23 cents, leave a runner, take most profit there, leave a runner. And then that clears, keep holding on to your runner or look to long. I would target 26, 28, and 30 cents above. But unless we get that false breakdown set up, I have no interest in long and Doge right now. Okay, Berkshire. What I mean, wow, it's who the hell is buying this up here? There's over $500. Well, I tell you this, guys. We had this top or this pivot high over here back in November. That level is at 491.67. We recently cleared that level, and we even back tested it as a support, and that was on February 25th. Back tested it as a support. We got some buying pressure there, and now you saw yesterday, the 27th, had some bullish follow through, guys. Holy moly, donut shop. Well, as of right now, I have support at 505 and the fib level at 503.8. I am overall bullish above 503.8 with 507, 510, and 511.3 as targets. Okay, at this point, I would not look to short unless 505 and 503.8 can fail to put 502, 500, or 498 or lower back in play. All right, guys. Thank you guys so much for watching. You guys are the best. I love you guys so much. You guys helping Uncle's dream come true, and that means everything. I'm so grateful. I get to serve. I get to be a part of people's lives. This is the best thing ever, and I just thank you guys. All right. So hopefully we keep on going hard. It's Friday. Let's finish the week strong and safely so we can enter the weekend, doing what we love, be with our family, be with our friends, enjoy the fruits of our labors. All right, guys, remember, you guys are money magnets. Live your life with a mindset of abundance. Let it all flow to you freely, abundantly. Be open to the blessings. Blessings on blessings. And you guys are one of my greatest blessings. Thank y'all. Peace.